Hello everyone, welcome to the Ichimoku.co daily futures market review for the trading day ending Tuesday, February 10th. Firstly to gold futures, and here we see the market once again trading down below the 1237.9 level. For today's trading, the buyers were actually strong enough to take out the high of the previous candle, but found very strong resistance at and just above the Kijun-sen indicator. Very strong price rejection from there, the buyers losing commitment above there, and then the sellers coming in quite strongly to breach that 1237.9 area. The sellers have closed with control of this market for today. They've closed down towards the low, and it does suggest that there is every possibility of the sellers going on with the move and trading down to the next support level at about the 1218.8 area. Now we do still have a bullish market in the longer term time frame, with the market trading above the Ichimoku cloud. But the market was looking rather overextended, especially when we were trading up around the 1300 level. So a retracement of this significant second time frame uptrend is not surprising. And just looking at the Fibonacci retracement of this previous second time frame uptrend, and we're now looking at the retracement with this downtrend, this significant second time frame downtrend, with the market making a series of lower peaks and lower troughs. We have traded down through the 50% level, and the next target here is the 61.8% level, which coincides with roughly with the swing high in this candle at 1223. So that's going to be a significant area at 1221, the 61.8% level. And obviously that 1221 level is very close to this 1218 previous level of support and resistance. Just looking at the bands here with gold futures, and here we saw the previous bearish breakout down below the lower band, and the market for the last 2 days has rallied to that upper band and been rejected from there, and strongly rejected for today's trading. Now this isn't the strong follow through that we'd like to see. It's not as strong a candle as the one from 2 days ago on the breakout, but I'd like to see a bearish candle taking out the low of that candle, that very strong bearish candle, and the low is at 1228.2. so a strong bearish close down below there would confirm the transition from that previous strong uptrend bias into a strong downtrending bias. Next to NYMEX oil, and here we've seen a change of trend today with this black body candle forming. The previous day's trading we saw the market testing almost up to the 54.66 previous level of support and resistance, and then the swing low just under there, and that area has held as resistance for the previous day's trading, and today we've seen the sellers come into the market and change the trend. Now having said that, however, we've seen support coming in around that $49.90, $50 round number, and we're unable to close down below there, and that will be a very important level moving forward, as will the area at the Kijun-sen and Tenkan-sen, roughly down around the 49.30, 49.40 level. Now we do have a bearish market in that longer term time frame, but bullish in the medium and fast term time frames, and a lot depends on how the market does react at the Kijun-sen and Tenkan-sen, and if the sellers are strong enough to breach that area in a bearish manner and build some downside momentum, we could end up seeing another test down to the roughly about 44.78 level, which has been a very important level of support. Now just looking at the bands here with NYMEX oil, and this really does give us a different perspective on what we saw with the Ichimoku charts. This really is all about the medium term time frame, and what we saw previously was the bullish breakout, the lack of follow through, the market retracing and finding support just at the middle of the bands, then breaking out again, and for today's candle finding support below the upper band, unable to close down through there. So that's going to be an important benchmark for the market tomorrow. As this new candle, or today as this new candle trades, we have the upper band at $50.83, and at the moment we are seeing some support coming in there as well. So the opportunity here is here for the buyers once again to bounce off this level and test to higher levels. Now if we see strong bearish activity down through there, then obviously support at the middle of the bands 48.26 should be watched closely, and then if the sellers come in even stronger than that, strong support should come in at the bottom band at 45.69. Next, looking at the US 30-year bonds, and here we see continued black bodied candle activity, continuing the trend to the downside. This current candle, the second last one on the chart here, is the one that's finalised trading, but it is an indecisive spinning top type candle. It suggests that there is a possibility of a change of trend back to the upside. Now, for the previous day's trading, we saw the sellers in control, the market finding support at 147, and we have breached that area today and closing down below there. But closing down below there in an indecisive manner does raise doubt about whether we are going to see the market trade lower. We do have strong support at 146.12, but at the moment, as this current candle is developing, it's opened down below the 147 level, and that 147 level may continue to hold as resistance. A bearish market in the medium and fast term timeframes, with the market trading down below both the Kijun Sen and the Tenkan Sen, and a bullish market in the longer term timeframe. So the opportunity is here for the buyers, if they're strong enough, to bounce off these levels and trade to higher levels. The next highest level that we should be watching here as resistance is the 148.23 area, and then just above there we have the Kijun Sen and the Tenkan Sen trading roughly about the 149 level. Now, just looking at the bands here with US 30-year bonds, and here we see very important trading activity down below the lower band. We had the bearish breakout, something of a squeeze going on prior to that, strong follow through, and then the upper band holding as resistance. We still have price activity down below the lower band, so it suggests that we still have a very strong negative bias in that medium term time frame. And if we do see the market rally, we should be watching that the lower band at 147.29 to potentially hold as strong resistance once again.